Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, May the 12th. We are not going to review earnings today. We didn't have big earnings, nothing major, so we are going to focus on the economic data. Today we got Michigan consumer sentiment preliminary for May, and look at this. The previous one was 63.5. We were expecting 63 and we got 57.7. Really crashed the expectations. Consumer expectations, not the sentiment, but the expectations, also 53, 7 points lower than the previous one, and also lower than the expectations. And for the inflation expectations, 4.5 versus 4.6, the previous one for the shorter term, and for the longer term 5-year inflation expectations preliminary, 3.2% instead of the 3%. Actually, these long-term inflation expectations is the highest since 2011. So what is telling this? What this data is telling us? Basically, this data is showing that inflation expectations are actually higher from the consumer side. They expect inflation not to come lower as fast as markets, for example, expect. The Fed is also not expecting this decrease in inflation. They already said that they are seeing signs of inflation slowdown in their acceleration, but they are not seeing clear progress. So this is aligned with that. But the big data today was this low consumer sentiment. This shows signs of demand destruction, shows signs of consumer not being optimistic and actually not willing to consume. And when consumer sentiment is this low, markets feel the pressure. We are going to really see this kind of data, this consumer sentiment, really crashing markets today. Because you can see today, we are seeing a clear downward pattern. This is the Nasdaq. On the 30-minute chart, we were watching this pivot, and before that, at 9:30, we got a big dump. We tried to establish this support, and if we see the actually 1 minute, this is the first support that we tried. Then we started consolidate and we got another move to the second 30-minute support. We got a little bit of bounce, but still this level was crashed. And slowly but surely, we are going down and down and down on the Nasdaq. 0.80 on the Nasdaq. 0.80. Actually, the Nasdaq is the weakest of the two versus the S&P. S&Ps are 0.56, but also seeing this. But if we check the daily, S&Ps are really different. This shows a different story than the Nasdaq, because remember that the Nasdaq is really driven by these hyper growth tech stocks that are crashing on FOMO. So obviously, this consumer sentiment really affects all the tech stocks, but also some other markets like consumer sentiment, consumer discretionary, XLY minus 1.21. It's really feeling the pressure. We were trying to break out this descending trend line, but this is actually bad. Obviously, consumer sentiment being this low affects consumer discretionary, XLY. And if we compare that with the ratio with staples, we are actually seeing this ratio going down. Staples are actually almost flat. Utilities, defensive sectors are in the green. And in between sector funds, XLV is also seeing a little bit of pullback. But we are seeing some outflow from consumer discretionary to utilities and staples, defensive sectors. We are seeing demand destruction also showing up in the crude oil, minus 1%, and really rejecting this daily level, this pivot. not even trying to break this descending pattern into the fib retracement, but also look at this copper. Remember, I'm sure after my yesterday's video, you are seeing a lot of Dr. Copper and copper headlines for sure if you are reading news, because this move was obviously a leading indicator of economy is sick. Bitcoin is getting crashed also. We were looking at this support yesterday. Now it's being broken, minus 2.53. And when all this goes down, well, the dollar goes up. Beautiful accumulation on the daily. On the 2-hour time frame, we were watching this accumulation, the pullback of the fib retracement and the breakout, beautiful breakout at this descending resistance. So I'm expecting dollar to find a lot of bids until at least 1.103, and then we might see if really economy is being crashed and we are seeing a lot of weakness on the markets, we might see dollar trying 105. What about yields? Well, yields are going up. The 2-year and the 10-year still range bound, and actually quite surprising, December interest rates are going up because basically they don't expect, after this consumer sentiment, they don't expect the Fed to cut that much aggressive. This is still pending. Bonds market are pricing in still a big, at least 50 basis points interest rates cut in December. I don't agree with that, but risk on is just being denied on Bitcoin, on the Russell, on the small caps. Look at these big red days. And Tesla, Amazon are the big ones impacted by this consumer sentiment. They are part of the consumer discretionary sector, minus 222 for Tesla and minus. But let me show you one thing. We were super up. If you are onto Tesla, you might notice that we got some news regarding Elon Musk stepping out as Twitter CEO. He has plans of putting a woman, on top of the CEO in about 6 months. So we skyrocketed on Tesla because it is supposed that Elon Musk will be able to focus more on Tesla after stepping back from Twitter. But look at this. Look at this. We were actually into the close. We were up 4.6%. But then, since the open, we are down 4.5%. Wow. Really brutal. So, really interesting to see this kind of moves, because the data is quite clear. We are seeing demand destruction already playing out on the copper, on other sectors, and on the tech stocks. So, what are the next steps? My first step is to actually see if we might reclaim this point of control around 13,400, a key level for the Nasdaq. We might be able to at least retest this kind of pivot that we have up here. We are quite oversold on the if we check the 30-minute chart, we are quite oversold down here, minus 31 RSI. So I'm expecting a little bit of bounce. That doesn't mean that there's no way. I don't think they are going to push Nasdaq or S&Ps into the green. I think there's no will of doing this kind of V reversal that we are used to see. So be really careful today, Friday, because the weekly on the Nasdaq looking quite bad. We are not able to reclaim this blue dot line that is the previous super dodgy bottoming tail of last week. And I mean, this looks really bad, really bad. The S&Ps looks different. They are already seeing weakness, in part because the S&P is already at half, around 13% of all-time highs. Nasdaq is actually more, is around 20%. Let me check. It's around, this is the Nasdaq, sorry, it's the Qs. So from all-time highs, it's 21%. So this is the market we are in. We are here to really interpret the economic data, the markets, and make conclusions. And with those conclusions, be able to trade and to get ideas on possible setups. For me right now, for today, I would like to see reclaim, in order to continue to be bullish, that I think I'm not going to be bullish next week. For today, there might be some opportunities around this blue dot line last week high in order to reclaim actually this move, the 13,400 for the Nasdaq. That may be a potential trade for that. I don't expect, maybe this confluence might be playing out for 410, but I don't expect a big move into the close. If we do that, I might reanalyze the weekly close. If we close on top of that, it depends on the weekly close. But let's see, the dollar is already putting a nice weekly candle. Copper is just being destroyed. Bitcoin is being destroyed, and the Russell is being destroyed. So a lot of weekly closes this week are going to look really nasty for next week. And that's the thing I most care about. And apart from that, it is what it is. We are already seeing demand destruction playing out on these markets, and it was about time to do this. Gold, finally, it's trying to hold, but I expect gold to really, let's see, around this level if we find demand. If not, I think fib retracement below 2000 might be the spot. But apart from that, be really careful today. Don't ruin your week on the last day in the afternoon. Just be smarter than that. And that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always. But remember that there's still hours until the close. Be really careful, and remember that discipline and risk management are key for success. Stay safe, everyone. Have a nice weekend, and I'll see you on Monday.